The Golden Standard Podcast, brought to you by WeSellSilverAndGold.com. Connect with us online to buy gold and silver at cost, or start your own journey into gold and silver as a business and wealth generator by calling 682-238-1557. All right, buckle up, everybody, for your deep dive. Today, we're talking precious metals, and the insights you sent in have got us feeling seriously optimistic about the future of gold. We've got those big-time financial institutions doubling down on their gold predictions, some even bumping up those price targets.
Exactly.
Plus, we're digging into the differences between gold and silver, how those markets move, and really what sets them apart as investments. By the end of this deep dive, we want you to understand what's driving gold and silver right now, what to look out for, and, really just think about how these metals can fit into your financial plan. Ready to jump into gold and silver? Want to cut out the middleman and get those metals at cost? Go to WeSellSilverAndGold.com right now. Or if you're thinking bigger, maybe even starting your own business around gold and silver, give us a ring, 682-238-1557. Let's talk. Now let's get this deep dive started.
All right, well, let's get right into it with this consistently optimistic view on gold. It's interesting to see institutions like Bank of America, Citigroup, and Macquarie, who were among the first to say gold could reach $3,000 per ounce, are not just sticking with that prediction.
Right.
Some are even going higher.
Yeah, and I think it's worth highlighting why they're sticking to their guns, right? What are they seeing?
Yeah.
And it really seems to come down to the global economic picture. There's this sense of, uncertainty.
Absolutely.
Things feel a little shaky, and gold has always been that safe haven asset.
Yeah.
It's like when the seas get rough, investors grab onto gold for stability.
It's a great analogy, and I think it's really reflected in what the data shows. The sources we're looking at here, they really point to gold's impressive run since late 2022. Its price practically doubling.
Wow.
Central bank purchases and huge buying activity from China have been big drivers. This isn't just Western investors, This is a global thing.
Right.
And of course, gold recently went above $3,000 an ounce. That's a big psychological barrier, and that was driven, at least in part, by worries over U.S. trade policies, a dip in consumer confidence, and those rising inflation expectations.
So the overall picture for gold is looking pretty bright, at least according to these big financial players.
Yeah.
But the sources also delve into some of the specifics that could drive prices even higher, and even reference charts to illustrate their points.
Yeah.
Let's start with ETFs.
Exchange-traded funds.
Yeah, exchange-traded funds. What stands out to you there?
Well, the big takeaway for me is the change in investor behavior. For 4 years, investors were selling off those physically backed gold ETFs.
Wow.
And now, in 2025, they've become net buyers.
Wow.
That influx into North American ETFs in February was the largest we've seen since July 2020. It really points to a resurgence of interest in holding gold, People are looking for a direct investment vehicle.
Yeah, and Citigroup's analyst Max Layton actually made an interesting point about this. He suggested that as the U.S. economy maybe starts to slow down, a lot of U.S. households are going to start looking at gold ETFs.
Right.
He even called it the big development, that shift, for that next big price jump.
Right, and it makes sense. Central banks, high net worth individuals, they've been actively buying gold. But your average household hasn't really been that into it, not on a large scale.
Right.
If Layton's right, if those everyday investors start pouring money into gold, that's going to add a lot of fuel to the fire.
Yeah.
Quantix Commodities, they also pointed to this. Remember gold's rally during the pandemic? ETFs were a big part of that. So yeah, sustained and growing interest in these funds, it seems pretty crucial for driving prices higher.
Now, of course, nothing goes straight up, right?
Yeah.
The sources did mention some potential bumps in the road for gold. What are some of the risks to think about?
Well, I think the big question is how gold will react to short-term swings in the market. The analysts we're looking at here, they caution that if we see, really big and sudden sell-offs in the stock market, some investors might cash out of their gold positions, even if they're profitable, to try and cover their losses elsewhere.
Oh, I see.
TD Securities' Bart Mellick, he brought up the 2008-2009 financial crisis. Even during the pandemic, at the very beginning, there was this initial panic.
Yeah.
And even safe haven assets like gold, well, their price dipped a bit during those times.
So it's a reminder that even the safe haven, there can be a little bit of a storm, right? Especially when things are really chaotic.
Exactly.
But it sounds like long term, the outlook is still optimistic.
Oh, for sure.
Yeah.
Bank of America, Michael Widmer, he's acknowledging those possible short-term dips, but he's still sticking with his long-term price target, $3,500 an ounce. And then we've got this really interesting development in China.
Oh, yeah. What's that?
Beijing recently made a decision to allow insurance companies to invest in precious metals.
Now, this could potentially bring 300 tons of new demand into the gold market.
Whoa.
That's a lot. That's roughly 6.5% of the entire global annual gold market.
So we're talking about serious buying power coming from institutional investors in China.
Yeah, that's a lot of potential demand. It feels like everything is pushing gold higher.
Right.
Individual investors, central banks, now potentially big institutional players in China. And then we have the real interest rates.
Okay.
Now, real interest rates, that's the interest rate you see minus inflation. Typically, when interest rates rise, people don't want gold as much.
Okay.
Because they can get a better return elsewhere.
Right.
But gold has kept rallying, even with the recent interest rate hikes. It's kind of strange.
It's interesting, right? Because you would think it would go the other way.
Exactly. So why is gold doing so well?
Yeah, why?
Well, Macquarie's Marcus Garvey offers a pretty compelling perspective. He argues that the sheer size of government debt and deficits right now in a lot of different countries is making investors nervous.
They're starting to factor in credit risk with those government bonds.
Oh, interesting.
They see gold as a potentially safer bet.
I see.
What I find really interesting is his point about unsustainable fiscal policies. You know, when governments spend more than they take in, that essentially devalues the currency over time.
Right.
And gold, because it's a hard currency, it benefits when fiat currency starts to weaken. It's not just about running for cover during a crisis, it's about having something stable to hold on to when currencies might be losing value.
It really is a different way to look at gold.
Yeah, it's not just crisis insurance, it's value insurance.
Right, exactly. And then we can't forget about the central banks. They've been snapping up gold, and they haven't stopped. They were big buyers in 2024, and they're still buying in early 2025.
Oh, yeah, 18 tons of net purchases just in January. And China's central bank, they've been boosting their gold reserves for 4 months straight now, February included. Looks like a strategic move.
They're diversifying their reserves.
Yeah, exactly. They may be trying to rely less on those traditional reserve assets.
Which makes sense given what we've been discussing about the potential for those to lose value.
Exactly.
Which brings us to Goldman Sachs. They're so bullish on gold, they've raised their year-end price target to $3,100.
Wow.
And they specifically mention that strong central bank buying and the increasing investor demand, all tied to the uncertainty around U.S. policy and their expectation that central banks are going to keep gobbling up gold.
Yeah, I mean, it's pretty exciting for gold. But let's talk about silver for a minute. The information you sent in from Morgan Stanley, it really highlights some key differences between gold and silver. It's important stuff to consider when you're thinking about your investment choices.
Yeah, totally. I mean, they're both precious metals. They both kind of act as hedges when the economy's in trouble. But their fundamental drivers, how they react, how they behave, that's where the differences are. The first thing that jumps out is how much more sensitive silver is to the global economy.
Yeah, about half of all the silver used worldwide, it goes to those industrial applications, heavy industry, high tech. Smartphones, solar panels, even the electrical systems in cars. Gold's uses, they're much more limited, mostly jewelry and, investment.
So when the economy grows, the demand for silver goes up because those industries need more of it.
Yeah, exactly. Think about it. Solar panels, right?
Yeah.
Huge growth in that industry, and silver is crucial for solar cells.
Right.
So as the demand for renewable energy increases, so does the demand for silver. And of course, the opposite is true. If the economy contracts, goes through a recession, that industrial demand can take a nosedive.
Yeah, it hits silver a lot harder than gold because gold is less tied to those industries.
Exactly. And this ties into the second big difference, their volatility. The article calls silver way more volatile than gold.
Yeah, a lot more ups and downs.
It says silver prices can swing 2 or 3 times more than gold, even in just a single day. Now, for traders, that's exciting. You can make some quick profits if you can time those swings. But for long-term investors who don't want all that risk...
It's a little too much of a roller coaster.
Exactly. The third difference, it's all about diversification. Gold seems to be a much better way to diversify your portfolio.
Right.
The data shows that silver has a weak positive correlation with stocks, bonds, and commodities. But gold has consistently shown almost no correlation with stocks and very low correlations with other major assets.
That makes gold a much better way to balance out your portfolio.
Exactly. Think about it. You want your portfolio to be like a well-rounded team.
Yeah, yeah.
You don't want all players who only excel at offense.
Hmm.
You want that defense.
You want a diverse set of players for sure.
Yeah, when stocks are down, you want gold to maybe hold steady or even go up. That's why it's considered such a good diversifier, especially during tough economic times, because it's not really tied to industrial demand. It has its own thing going on.
And lastly, the article talks about the price. Silver is, well, it's a lot cheaper than gold.
Yeah.
It's more accessible for people who want to get into precious metals,
Yeah.
especially if you're just starting out.
Exactly. The barrier to entry is lower with silver. So we've talked about why all these financial bigwigs are bullish on gold. We've looked at how gold and silver stack up against each other. But now, for you, the listener, it's about how to get involved. How do you actually invest in these metals?
How do you get started?
Well, the most straightforward way is buying the metals directly.
Yeah.
Gold and silver bars and coins.
Okay, so like physical gold.
Yeah, physical metals. And you can actually hold these in certain types of brokerage or retirement accounts.
Mhm.
There's usually a third-party depository for safekeeping. And if you want, you can even get the physical metals delivered to you.
So it's not just about, having a piece of paper that says you own some gold.
Right, you can actually hold it.
You can hold the actual metal.
Yeah, if that's what you want. But it's not as simple as just looking at the spot price and buying. There's more to it, right?
Okay, so what else should you know about buying physical gold?
Well, when you buy physical gold or silver, you're going to pay a premium on top of the spot price. That covers things like manufacturing the coins and bars, distribution, all that stuff. And if you decide to take possession of the physical metal, you've got to think about storage.
Yeah.
Secure storage, insurance.
Yeah.
You've got to keep your investments safe, right?
Absolutely.
So that's something to consider. Now, another popular way to get exposure to precious metals is through ETFs.
Right, exchange-traded funds.
Yeah.
Those seem like a much easier way to invest.
ETFs are super popular. They're easy to buy and sell, just like stocks, through your regular brokerage account.
Okay.
And the fund takes care of all that physical stuff, managing the supply of the metal.
Okay.
They do charge a fee, of course, an expense ratio to cover their costs. And it's important to remember, when you buy an ETF, you're not directly owning the metal. You're owning shares of the fund.
I see.
And one more thing, and this is important. Some precious metal ETFs might be taxed as collectibles.
Ooh, that's important to know.
Yeah, that means your profits could be taxed at a higher rate than your typical capital gains.
So that's something to research carefully.
Definitely.
And finally, the article mentions investing in mining stocks and funds. So that's like companies that actually dig up the gold and silver.
Yeah, this is a completely different way to play the precious metals game. Instead of owning the metal itself, you're investing in the companies that produce it.
Got it.
If those companies do well, you could see some serious gains.
So of course, it's a little bit riskier, right? Because it's tied to how the companies perform.
Exactly. You have to factor in all the risks of any business operations, regulations, the overall stock market, all of it.
Right. So as with anything, there's always risks and rewards to weigh.
Absolutely.
It really comes down to, what are your goals? What's your time frame? What's your risk tolerance? Are you looking for that safe haven of gold, the potential diversification benefits? Or are you intrigued by silver with its industrial uses and that lower price point? Understanding the differences is crucial for making smart decisions with your money.
Couldn't agree more.
So there you have it. Major financial institutions are betting on gold, with predictions of even higher prices in the future. We've broken down the key differences between gold and silver, highlighting their unique strengths and weaknesses, and we've given you the tools to start exploring how you can invest. If you're ready to take control of your financial future and own precious metals at cost, visit weaselsilverandgold.com. You can bypass all those markups and get started today. Or maybe you're thinking even bigger. Maybe you want to build your own wealth-generating business around the enduring value of gold and silver. Give us a call, 682-238-1557. Let's talk. Now, here's something to consider as you move forward. With the world economy changing so rapidly and, that timeless appeal of precious metals, how can gold and silver help you build a secure financial future? The Gold and Standard Podcast brought to you by WeSellSilverAndGold.com. Connect with us online to buy gold and silver at cost, or start your own journey into gold and silver as a business and wealth generator by calling 682-238-1557.